Hey guys, JC Peretz here, founder of allstarcharts.com, and welcome to our weekly options trade. I'm here joined, as always, by my esteemed colleague, Mr. Sean McLaughlin. Shawnee, what's happening, my man?
Oh, just making trades, trying to stay liquid, trying to stay flexible, trying to stay bullish. This market just keeps rewarding us on the long side.
You know, particularly the sector rotation is one thing that we've been talking about. The trades that we put on in small caps last month, trades we put on in industrial stocks, have really started to work, and started working right away, really, because we got that rotation, right? So if the thought process was, if this is in fact a bull market, and then natural rotation would come into some of those underperforming areas that were at some key support levels, and we certainly saw that, and that theme continues to play out in my head. So today, we were going back and forth about whether we should be putting a position on an energy. What did we decide? We're going to talk about both, right? We decided both?
Yeah, so there were two trades on the books, or two trades that we both liked. One was Occidental, and that's a trade that we have visited that trade numerous times over the past 18 months or so, and we'll get into that in a sec. The other trade that we really liked was DraftKings. And DraftKings, we've been talking about it on and off over the last couple of weeks. Straz has been pounding the table on DraftKings. He's very excited about it for good reason. And so those are the two trades we were kicking around.
What's the good reason? That he's making money on it?
Well, he likes the chart setup more than anything. And today we got a little action in DraftKings that I liked, which spurred me to take a position. You like Occidental, and we'll get into it. I like Occidental too. I just like the upside potential better in DraftKings.
I already, listen, there's two schools of thought here. Is it going to be a situation where, you're going to get the leadership groups continuing to rally higher, right? DraftKings already broke out. I would consider a leader already making new 52-week highs. If a stock's making new 52-week highs, I'm not going to put it in the laggard category. Also, the fact that it's already broken out above that former resistance level, sort of completing a base. We talk about a lot of stocks that have yet to complete a base. Should we anticipate and buy it ahead of that potential break? Like, we've seen that a lot, but we're also seeing stocks that have already broken out, are already making new 52-week highs. So that we continue with that. And this is a big base, sort of zooming out, big base here in DraftKings. I find that really, really interesting. I have a different kinds of situation. Getting back to my earlier point about a rotation was Chevron. I bought Chevron calls earlier this week. I like that it's support. It's a long-term uptrend. I think we could potentially get back to those former highs. And we were talking here. We were talking about Occidental Petroleum, right? So a similar trade to the Chevron, down near support levels. Here's Occidental Petroleum down near support. So one is playing a trend that's already working. Another one is betting on a rotation. Two completely different trades. You like the DraftKings better, right? What is it about the DraftKings you preferred?
Well, before I answer that, let's just go back to this Oxy real quick. The thing that you liked about Oxy, the thing that we talked about in our meeting this morning was that, man, we've seen so many versions of this chart or a chart like this work for us this year. I mean, Caterpillar, Meta, there's a few, they're escaping me right now, but there's
small caps, industrials.
Yep. Oh yeah, IWM, right, XLI. A lot of these, we've seen this chart, and every time, I shouldn't say every time, but many times it's worked out in our favor. So excuse us for wanting to keep doing it. It keeps working, right? And so I totally get why you like this Oxy chart, and I like it too. I like the DraftKings better because when I'm looking at Oxy, just keep that Oxy up just one more second. When I'm looking at that, the Oxy chart, while I think that level can hold, and I think that's a good level to sell puts at, which, by the way, we've been selling puts at that level for the last 18 months, and it's worked every time.
Yeah, because Warren Buffett keeps buying at those levels. Like, that is
right.
literally Warren Buffett acting as support.
Right.
When you're like, oh, is that Warren Buffett buying Oxy today? Is that why it's up? A couple of days later, there's the filing from Uncle Warren. Like, it's right on point.
Right. So I still think it's a great stock to be selling puts in. I'm not as bullish on making an aggressive, call purchase or any kind of long trade, just because I'm not sure it's ready to go higher yet. I still think it's going to hold these levels, which is why selling puts is still a great trade. I'm just not as aggressively bullish on this one right now. And comparing that to DraftKings, which is the trade I chose, I liked that because DraftKings is breaking. It's already got an established uptrend for the entire year, since January 1st. It's breaking out above that level there that you've got that little triangle, if you want to call it that, that's forming there. It's showing all the signs. And man, Straz and I have talked about this a couple times in the Flow Show. DraftKings is one of those names, JC, and I know we don't put trades on for these reasons, but it's just fuel to the fire for me. DraftKings is one of those names that if this thing starts moving, it's got the characteristics that the meme stock traders love to play, right? Like it's a name that everyone knows. Everyone's going to jump aboard. It's going to be one of those things that everybody plays with. It's going to be a toy, right? And this thing could easily rip back up to new highs above 75 if the momentum players get involved. So that's why I think there's a lot of potential here.
For me, I got to see it. I haven't seen it yet. This consolidation is taking a little too long for my taste. I like selling puts in Oxy. I already got the calls on the Chevron, right? But I look at the higher lows in the Chevron, with the lower lows in Oxy. Don't you rather play the relative strength? So I know, the beta is probably in Oxy, right? You're probably getting maybe more bang for your maybe a bigger move in Oxy because Chevron's such a huge market cap. But I like the relative strength in Chevron. We didn't talk about selling Chevron puts. We only talked about selling Oxy, but I think you'll be fine selling Oxy 55s, right? Selling the 55s. I don't hate that.
We were looking at the 55 selling in August. And by the way, we didn't talk much about Chevron, but the reason why I love the Chevron. I'm biased because I've been long for almost a year now. We bought some leaps almost a year ago. So I'm still in that position. So
that's a legacy position that we took half off the table when those calls doubled because we bought them over a year ago, probably. Yeah, it was definitely over a year ago. And, so you let the rest run after you take half off the table. So we have that legacy, successful trade that we have till January on that. But my point in our meeting today was that who cares? Great. No one's complaining, but that was a decision we made a year ago. Why should that impact us putting on a risk reversal in Chevron?
Look, if you want to treat it as a separate trade, you absolutely can, and some people will. I feel like I'm already good there. I'm covered. I'm already exposed on the long side. I'm good.
See, I don't agree with that. I think it's irresponsible, Sean. I don't like that strategy at all.
Actually,
what does one have to do with the other? If you want to add to energy exposure, why not add to energy exposure? It's the same stock. So what?
My answer to that is there's nothing wrong with Chevron, and I like Chevron. But if I had to pick one trade today, which I did, is I think DraftKings has more potential from here. That's all.
You like selling, but okay. So let's say we didn't have this DraftKings, and you're like, all right, I'll do the Oxy chart. I'll do the Oxy trade. You like selling the 55 puts, not buying the calls with that income, but just selling them naked.
Yes, in Oxy, I'm not keen on buying the calls here.
How much are you getting for the 55 puts? August?
I think we looked at it was like $1.50. Let me I can pull it up here real quick. Give me
$1.50. So the idea is if we could buy them back for 75 cents, we pull the trigger and take the profit, right?
Actually, you can get 130 for them now. The price may have moved since we last looked, but
130. So around 65 cents. If you buy them back for 65 cents, you book the profit, you call it a trade. That's sort of the thought.
Yep. Yeah.
And then what about the 60 calls? How much are the 60 calls?
60 calls are $1.65-ish.
$1.65. So it'd be a 30-cent debit if you were to use the proceeds from the sale of the puts to buy the out of the money calls. You're still putting up 30 cents.
Yeah, it just, I don't like the trade. I don't like doing that trade because then now what happens is you've got a debit in the trade, a small debit, 25 cents, but now you got very little room for error. If this thing does break this level, if Uncle Warren stops buying for whatever reason, then this trade turns into a loss pretty quickly. So I don't like buying the calls. I selling the puts by themselves, I'm okay with, but buying the calls, I think you're throwing money away.
All right. Well, then let's go over the trade that you do like more. I'm still thinking about what I'm going to do there with the Oxy. I don't necessarily love this trade. I like the Oxy trade more, I feel like. I'm going to continue to give this some thought, but it's good that we do these videos and people that are watching, sort of understand the thought process as to, why we're doing one over the other and, what makes sense in what environments. There's no one type of options trade or any kind of trade that's great for every environment. It just depends. Where's volatility? What do you think it's going to move up? Do you think it's going to move down? Do you think it's going to move sideways? Right? There's sort of a scenario and a different type of trade you could put on depending on all of those scenarios. But Sean likes the DraftKings, specifically the December 35 calls with volatility as cheap as it is right now. The stock right under 26. You could buy the 35 calls for $1.40. Is that right?
That's correct. You could buy them for a little cheaper than that now, as the market has sold off this afternoon. It's brought everything down with it. So DraftKings is a little bit cheaper now. That's fine. That's good. But the 35 strike calls in December currently offer us around a 25 delta, which we talk about all the time. That's my sweet spot. And if DraftKings makes a run, if it does the kind of run I think it can do, we're going to get a lot of leverage in those calls, and there's a lot of upside.
So if we take out the June lows, right? So those mid-June lows sitting right around 24. Any closing price below 24, all bets are off?
Correct. If we get below 24, I'm either early or wrong. Either way, I don't like it. I'd rather sit back and wait for it to reset up and try again with a fresh breakout.
I'm liking this trade more and more as we walk through it. I really like how well defined that risk is. I don't know. I'm thinking about maybe, am I willing to pay more to see it break out first? How do you feel about that?
I don't hate that at all, only because I feel like if this runs, it's going to really run. I think it's got at least 20 points of run in it if it gets going. So yeah, if you wait a couple points here, wait for a little bit more confirmation, I think there's still plenty of upside for you.
It's like a dry aged steak, you pay a little bit more, let it age a little more, right? Right. Maybe, maybe a little Barolo, a little more action there in barrel. Maybe, it's kind of like you're going to pay more for that premium to know that it's already broken out. Hasn't done that yet. And I'm a little skeptical, but I do like how well defined the risk is here. DraftKings sitting right at 25.75, break below 24. All bets are off. That's not that close. It does give it a little room to dance.
There's a little room to dance.
There's a little room to dance.
Look, the good news here, JC, is whether we do the DraftKings trade, the Oxy trade, or even the Chevron trade, we could win in all three, right? It's not one or the other is going to work. They could all work, so pick your poison.
No, I like the thought process. We don't normally do this like double trade situation when we do these videos. We kind of stick to one theme, but like today we were talking and sort of debating back and forth. So I thought that was interesting. I also didn't, I thought that the premiums that we'd be getting for selling the puts in Oxy were going to be less than what you described. So it kind of made me more intrigued that, it was worth it. What about on the profit side, right? So, $1.30, $1.35 for these December 35 calls, which gives you almost 6 months until expiration. You were talking to me today about how you don't love, you're loving less and less selling half on a double of the calls because you feel like you're leaving money on the table. Is that a circumstance of the environment that we're in, or is that actually something that you are considering pulling back on?
It's a little bit of both, right? Like, periodically I go back and review my trades and see, what has worked and what hasn't worked. And I've been noticing in several trades this year, and it's a function of a bull market, right? But I've been noticing that there are a lot of long call trades that I've had on that were profitable, that had I not taken half and just, had some cojones and let it ride, they could have been some really, really big winners. And I'm kicking myself like, man, I really left some meaningful profits on the table. And look, selling half at a double is the best practice I've done for a long time because it helps me sleep at night. It helps take, portfolio volatility out of the equation for me a little bit. And that's good. And that's peace of mind. And if you value peace of mind higher than anything else, which many people do, and there's nothing wrong with that, then being conservative and taking money off the table methodically is a good thing. However, if you're in a situation where you're playing with house's money, right? You've had a good run for 6 months or a year, you got a good cushion of profits. maybe you can be a little bit more liberal with some of these trades and you not be so conservative in taking profits. Just, let them run if you got those cushions, which is kind of where I'm feeling right now.
What if you take off a third or a quarter?
Well, you could do that. You can do that. My plan with this particular trade, the way I laid it out in the blog post for our readers, is I'm being aggressive with this one. If this thing runs, I'm going to hold it. I will look to sell half, JC, but, and this is a big but, if it breaks out to last year's highs. If we get to last year's highs up around $70 a share, then I'll take half. And by then, we'll be sitting on a huge profit at that point. So it'll still be a lot of profit in that trade.
Did you say $70 a share?
Yeah, it was. What was it? 2 years ago was the high. I think it was 70 something. I don't have.
I mean, brother, it's at 25.
I know. Hey, I told you this is aggressive.
You're talking about how you're being more conservative by taking half off the table after a triple. Is that what you're talking about here?
There's nothing conservative about what I'm doing in this trade.
Who you fooling? Who you fooling, Sean? All right, guys, listen. As always, are we going to be doing this while you guys are in Asia? You guys leave next week. Are we going to do this? I guess not. Maybe
we could do it. It'll be well. We might have to pick a new time. We'll talk about it. But I would like to do it.
You guys are in. So Sean and Straz are going out to Asia next week. They're going to be out there 3 weeks. Where are you going? You're going to Singapore, Kuala Lumpur, Hong Kong, Taipei, Bangkok, Ho Chi Minh, Tokyo, Manila, right?
I think you got it. Well done. Very impressive. Well, this time next week we'll be in Singapore. So we'll see.
Dude, the chicken rice in Singapore is so good. Oh my God. Fantastic. After a long day, you got munchies. Oh, it's going to be great. All right, guys. As always, this is our trade of the week. Sean, I'm thinking about doing it myself, actually. I'm being convinced here. I'm being convinced. Might wait for the breakout. DraftKings, December 35 calls. Right now, they're about $1.30, $1.35. DKNG. Occidental, also thinking about selling the 55 puts. But if at any point Occidental Petroleum closes below 55, you got to unwind that trade. I mean, I'm not telling anybody what to do. I'm telling you what I'm going to do. I think you have to unwind that trade. If at any point Occidental Petroleum is below 55, can't touch it. And if we could buy back those puts for half of what we got them for, then we'll go ahead and do that. I haven't put on either of these trades, but I'm thinking about, I have to think through it. Haven't decided what I'm going to do here, but that's sort of the mindset. I think that adds value, Sean, no?
Yeah, we're adding value every step of the way, my friend. That's what we're here to do.
Listen, it's real. I mean, this is what I'm thinking about. I don't know what to tell you. All right, guys. I'm JC Perez. This is Sean McLaughlin, and we will see you live from Singapore next week.
Woohoo! All right.
Adios.